Baby, in this video, I'm going to show you the absolute power of trading the monthly time frames and how it can help you become more profitable. Let's get it. Baby, we are back with another video. How are we? I hope you're all keeping well. So in this example, I want to show you GBP, Japanese yen, the wild one, GJ, and just how incredible it is just being aware of the higher time frames. Now, before we jump into this video, as a quick reminder, guys, if you are looking to become financially independent, what do I mean by financial independence? I mean you having your own source of income that are in your control, that you optimize, diversified. It's more important than ever. You would have seen what happened with the pandemic. So why shouldn't we all start becoming more entrepreneurial and having these independent sources of income? Click the link in the description just to learn more about that. Now, let's jump straight into this video. Before I actually get onto the details, the full-on details here at GJ, let me just give you a little bit of theory to just consider. Now, when we're trading the higher time frames, these are more significant. They're very strong. They're strong levels. Why? Because these are the levels. These are the time frames that the institutions are playing. Okay, that are trading. They're playing. Yeah, they're playing this game. They're trading because institutions don't look at all the noise. You know, they build up like a fundamental view of, you know, the currencies that they're trading. For example, for the UK, GBP, for Japan, JPY. They're looking at economic conditions. They're looking at monetary policy, what the central bank's doing, what's happening in politics. They're building up all this view. And obviously where they've got so much buying power, obviously these guys have larger stops as well, right? And they move the markets given the volumes that they're trading. So they are looking at these higher time frames. They're ignoring all of this noise, and just trading those higher time frames. So it's very important that we become aware of those. So I want to show you this example now. Let's get straight into it. GBP, JPY. Now, I've got a lot of zones here. You can ignore these. These are all on a lower time frame. But let's look at these two zones as an example, okay? As you can see, marked up in purple, where I've got these green lines, very significant. Now, we'll start off with the one down here. Okay, so this is a zone, a classic zone of what I'm talking about. It's going to be defended, okay, because it has significance. It's what the institutions are trading. They're trading these big zones, these big areas. So what you'd have seen here, and remember, guys, history repeats itself. Always keep that in your mind, okay? And that's like looking left of the chart. So as you can see down here as an example, obviously, let's just go here, all right? In August 2019, September 2019, big buying area here, big area of support. How do we know that? Well, we would have looked left of the chart.
Ooh, you're hard, showing off.
As you can see, look left here. Back in December 2016, November 2016, the price was heavily defended within this area. You know, you could go back further and you can see, look, history repeats itself, my friend. So we know this is significant. If the price comes down here, we're going to look to enter, right? And obviously you find your entries on the lower time frame. Now, I'll give you some examples in a moment, but let's go up to the top a moment as well, because this one's most recently, which myself and our community capitalize on as well. So guys, do not hesitate to check freakfxtrading.com for fundamental and technical analysis and trade ideas. Get involved, we kill it. Become an all-rounded trader. So here, I want to show you, in May, I was already aware of this because what did I do? I looked left of the chart. I saw what happened here. Remember, history repeats itself. February, January 2018, we hit this big top, and obviously GJ entered a huge bear market to the downside. Rallies, sold, rallies, sold, rallies, sold. You can see the firm bearish structure there to the downside, you know, printing lower highs, lower lows, lower highs, lower lows. You get the point. Okay, so I knew in this area, I'm being prepared now. I want to look to short this because I know it's a top. I know instantly it's like we hit this big wall because it's a monthly area. It's huge. It's going to have an impact and it's going to knock the price back down. And that's exactly what we saw. You saw that rejection, and we left this wick in June. And again, we were looking for that to be filled. And so look at that. It was filled. Now, let me show you some examples. Okay. I'll give you a few of how you can obviously be aware of this and then look to trade it. Now, you can see I've got a lot of zones. Right? A lot of zones. I really speak about these in detail in my course. Again, you can just, if you're interested, you can check in the link in the description about that. But look, let's just go back to 2018. Okay, here's the rejection previously, back there, January, February, which we spoke about. You know, it's beautiful here as well. On a daily time frame, we formed this nice, you know, evening star, almost like evening star, shooting star formation, which is then obviously confirmed selling a change in trend, you know, as a confluence that we're going to see a change in trend. So how did I capitalize on this one? Well, we're going to go to it now. Okay, again, I saw this daily evening star formation forming at the top of the trend. I knew, okay, we're going to see some downside, but I was just extra safe. I waited the following day, see that we closed below that, and so did we. We closed below that evening star formation, and we entered a bear market. Then for me, I then dropped down to the 4 hour. Okay, and then I started seeing, I'm just going to remove this purple zone just for a moment so I can explain. So you see how I've got these subzones. I say these subzones because they're on a lower time frame. These are my like 4 hour zones. Okay, so then this was the rejection, initial rejection. And then, you know, we work from zone to zone. Okay, so breakout, retest, formed a nice bearish engulfing candlestick here, and selling. Okay, we broke through, obviously we retested that zone again, but you can see the rejections there. Obviously you're building up confluences, you're building up pictures to keep, you know, to sustain that trend to the downside, to keep your bias to the downside and making sure you're on the right side of the market. Remember, the trend is your friend. So, you know, when you are in these, when you do see these rejections, start looking, what are your reasons? What are your confluences for taking trades? Look, we formed a flag here, there's one here, formed a flag here. Then again, this is one where we really capitalize as well, adding to the positions, adding to the shorts. Nice little wedge structure here as well, okay? And then within this wedge, forming flag here, forming a pennant here, you can just see being able to capitalize, just spotting these things. It's all it is, guys. It's not even skill, okay? It's being aware, okay? Being woke, stay woke in this market. Know what you're looking at for in terms of your triggers, your confluences, and stick to your plan. And don't deviate outside of that. Okay, it's as simple as that. Saying it's simple as that, it's not, because it's the mindset. Okay, you're gonna stick to this plan and stick to what your rules and trading this. So anyway, we capitalize on this move here, and then look again. We come up to this zone, look, zone to zone, big rejections, look, price, toppy, and then big selling pressure again, coming all the way to the downside. Okay, so I think just be aware of these monthly areas, because there's definitely some pips up for grabs early on, okay, if you're aware of those. It's important that we're aware of them as well, not just to capitalize on, but to make sure that we don't get, you know, our accounts burned. Remember, our account is our baby, it's our little baby. Capital preservation's key. If we don't preserve capital, how are we ever gonna have longevity in this game, right? So start when you're conducting your week ahead analysis, okay? Monthly, weekly timeframes are a must. Okay, a must. Maybe not doing it every single week on the monthly, but being aware. You're aware. You know where your monthly levels are marked up, so that you don't get caught off guard by not knowing them and going against potentially the longer term trend or these big areas that are going to come into force by the institutions. Guys, as a reminder, please do check the link in the description. If you are keen to build financial independence, you will be mentored by me with my team and other entrepreneurs. So do not hesitate to click the link in the bio. If you're interested in timely, fundamental, and technical analysis, learn all that's in here. Again, links are in the description. Smash up that subscribe button, please, baby, and that like. Let's get it.